Good morning, folks. This is Anne-Marie. Wanted to talk to you a little bit about what the broad markets are doing. I am going on a radio silent week as I step away from the markets and regroup, mentally give myself a break. Gotta have balance in my life, certainly. And at this stage, I really get to do what I want to. So there you have it. Taking a look at SPY. This is a bearish butterfly. Let's expand it a little bit. This is a weekly chart. So these are weekly candlesticks. What it is showing is that our primary stopping event is somewhere around here. Now, let's take a look at this chart. How long can we stay away from our 50 simple moving average? Well, from May 2008 until July 2009, which is a year and 2 months or so, yes, we were far away from our 50 simple moving average. And then we spent 2008 to July 2010, no, July 2009, excuse me, to July 2010 or June 2010, somewhere around 10 to 12 months away from that 50 on the weekly again. And then here we spent several weeks in some kind of choppy sideways formation. We began to drift away September 2010 to August 2011. That's 11 months away from the 50. Sideways action here. We spend June of 2012 to November of 2012. That's just about 5 months. And we're touching it again. We have a little bit of close period now. January 2013. Here we are, November 2013, and we are very far away from this 50. Right? So we've got 11 months away from the 50 simple moving average. What do we have here? This one gives us about a year and a half. May, this is the longest stretch. Not even. A year and 2 months. So we could easily have 3 months before we touch this 50. Right? And we don't go up for 3 months and then collapse. What this thing's going to start to do is rotate over. It takes, once the rotation moves, we've got about 1, 2 months, 1, 2, 2.5 months, 1, 7 weeks. What's the rotation? 1, 2, 3, 1, 2, 3, 3.5 months. So, what's the point of all my counting here? What I'm saying is, it is very likely that we are up in a space where we will need to rotate over to come and kiss this 50. Just a natural event. We are close to targets up here. The market is very frothy. It's been riding up here for a long time. Look at how long we've been in overbought territory. And really, that is the longest that I've seen that happen at one time without a pullback into the 50. There's another pullback into the 50, into the 50, into the 50. So we do need that event on the horizon. It is coming. All right, so we're close to that top end. We're going to see that rotation, probably going to take us anywhere from 7 to 12 weeks to get back to that 50, but that's what I want you to think about. What does that mean? That means that when you set out to take long trades or short trades, and you're thinking about a trending space, we are in a decision zone. So it's best not to think about taking the trending trade right here unless it's a short-term long or a short-term short, right? That being said, What I want you to do is pay attention. This could be a very important week. It could mean that we actually go into Christmas with a Santa Claus rally for a couple of weeks and then begin to rotate over. But we are in desperate need of a little bit of rotation. Let's come in with much more granularity to see what we're going to see for the next week or so. We continue to sit above the VWAP, above the 8. As long as we hold relative support, folks, we are not rolling over. So even though we know what is coming, we cannot get in front of the trade unless we've got remarkably deep pockets and tons of emotional capital. Because if you get short here simply because you think the market is overbought, I want to look at this one more time here. Just because we think the market is overbought does not mean that it is going to roll over. So, as we take a look at this, we are still making higher lows and higher highs. Stay long as we continue to hold support. Doesn't matter if it's expanding over the targets. When it begins to lose some support, watch the trade on a closer perspective to see where it is that it's going to come into relative support. On the hourly chart, 180 certainly looks like support action for me. Indeed, looks maybe like 180.23 might end up being that relative support region for us to watch, right? That's really the best that we can look at for right there. This might creep up to that event. That's going to be the primary line in the sand, after which we're going to jump right down into this congestion zone at 179.35. Otherwise, we're going to keep our eyes. Look at this. See this band of sellers at 180.124. Been there for several days. If we pop up and hold this region, we are going to go into target. Overcoming the sellers here will be a big buyer's coup, and there'll be a rush because people still want to be involved in the market. What's the bottom line? Pay attention, watch the levels, and trade accordingly. If I breach here, what does that mean? It means I've overpowered all the sellers. If I breach this region where these wicks are, it means in the short run I've overpowered the buyers, propping it up. If I've overpowered the buyers as a seller, I need to be short under these levels. If I've overpowered the sellers at this level, I need to be long above this level. Think about the market in simplistic ways, folks. You're going to end up making a lot more money, I promise. All right? Take care and good luck trading.